So we're joined with Caroline Claydon today. Thanks very much for joining us, Caroline. Appreciate you coming on and giving us your time. Could you give just to get started, could you give the listeners a little intro and background on yourself and how you got started in property, when was it, and what strategies you can get involved in?
Yeah, so I've been buying property for 22 years. Oh, God, that makes me sound old. Yeah, I bought my first property in 1998 in Edinburgh, down in Stockbridge, but that was a property for me to live in. And probably about 2 years after being in that flat, I was starting to think, how are all these people buying loads and loads of property? I need to find out how they do it. And I actually managed to find somebody that was doing it. And I sat down with him in a pub one night and said, right, show me what to do. And he talked about releasing equity from a flat, using that as deposits and everything else. And I immediately said, I don't want more debt. No, I'm not going to do that. And so I just didn't. But over the next 10 years, I accumulated between me and my now husband, Nick, around 7 buy-to-lets, just slowly, you know, working hard in our jobs, saving deposits, doing it the old-fashioned way. But we thought we'd done really well.
Yeah.
Yeah, we thought we'd done well, just sort of Edinburgh area, Glasgow. We had a couple down south just because Nick's from down there. And then we set up a recruitment business that failed in the recession of 2008. Found ourselves in financial difficulty, and I read Robert Kiyosaki's Increase Your Financial IQ book, and he was talking about buying properties with no money. And I thought, well, I've got no money, so now's the time to probably do what he does. And I attended a 3-day training seminar and worked with a property mentor, and I was kind of buying one property a month after that. So focused on the central belt of Scotland initially, doing buy-to-lets and social housing. So that was March 2009 I started professionally, if you like. Had no money and all that stuff. So I had to be really, really creative with how I raised money for the deals. And then moved on to doing other sort of, I guess, more creative strategies like lease options, and then moving to multi-lets down south, and then HMOs, and then bigger HMOs, and then our recent project is a sort of smart hotel. We're kind of combining serviced accommodation and a hotel. So it's going to be a hotel with no staff. So that's handy when you're in a COVID lockdown.
Yeah, I love that strategy. I saw the pictures on Instagram as well of the refurb. It's a nice boutique hotel finish. It's looking phenomenal. Could you take us back to, like, you know, after the recession, when you're looking to build up that portfolio with no money? Did you go to private investors to raise the funding, or?
Yeah. So that was it, private investors initially. Well, obviously, because we had this failed business, I was paranoid about going into my credit file and getting, you know, personal loans and credit cards and lots of other techniques that people had talked about. Like bridging finance to me mentally was just a block. My dad's a chartered accountant with a 30 years banking background. So I was brought up to believe that debt was like devil's work.
The enemy, yeah.
Yeah. So I went along the private investor route, and you know, it's really the mindset behind that is the biggest challenge for people starting out. And I know you've got a lot of people, listeners, that are trying to get into property, and the money is a big block, but it is just a mindset. And as soon as you believe in the deal that you're actually putting together, you know that you're giving them a better return than they're going to get in the banks, you're actually doing them a favor, you're helping each other, it's a win-win. As soon as you can start seeing it in that light, it just started to flow for me. And as soon as you've got one angel investor that wants to do business with you, it builds your confidence, you start, you know, chatting to folk, and then they recommend you to other people, and then you've got too much money to deal with, and you have to get out there and start finding more deals. So
Caroline, see, obviously, without dwelling on the negatives, and obviously you hit a bad time there with the failure of the business and stuff like that, but obviously you must have learned a few lessons from that. And did that really, you know, how long did it take you to get back on your feet after that time? You know, how did that all pan out?
Yeah, so I would say, well, financially getting back on our feet, our recruitment business basically died January 2008. We didn't really start buying property until March 2009. There was over a year of suffering, trying to still make the recruitment business generate some income for us, but it just wasn't. So I think in hindsight, we should have pivoted earlier than we did. But if you don't know which path to go down, that's really, really difficult.
Still believe in the process and still trying to make it work, yeah.
Exactly, because it's all we knew. And then so March 2009, it took us to March 2010 to generate £3,000 a month cash flow from our properties. And that was enough to kind of keep our heads above water.
This was including the 7 buy-to-lets that you previously had in before the recession as well, yeah.
Yeah, and in hindsight, those 7 buy-to-lets were really, really bad. They were really poor. The deal analysis that I'd use now, we didn't use on those 7.
You wouldn't touch them, yeah.
Yeah, I wouldn't have done them.
Did it help you? Did it help you get through that difficult time, having those kind of 7 investment properties in your portfolio?
Well, they didn't really cash flow.
Right.
So, although I think when you first start out, when someone says, I've got 7 buy-to-lets, you think, oh, that's amazing. But in actual fact, if they're not performing very well, it doesn't matter how many you've got.
It doesn't matter, exactly, yeah. You could have 100 or could have 10 if 10's outperforming 100, yeah.
Exactly. So that was, when we started the property journey, we had debt from the business kind of hanging over us. But what we did really work hard on is servicing that debt to keep our credit files clear, because we knew that was our way out of it, to sort of expand our way out. So yeah, a year from March 2009 to March 2010 to get our heads just above water.
Did you service the debt through the existing business, or did you service the debt through property deals you were going into?
So
thankfully your feet.
So we had, and this is a really dangerous thing to do, and I'm not saying to any of your listeners that this is something you should do, but because our credit file was healthy, we were taking out personal loan to service existing debt to buy us time.
Yeah.
While we built up the property stuff, and we were using private money to build up the private stuff, the property stuff.
No. So, I mean, do you feel like your experience at that time has left you a stronger general person in business now? Obviously, we're looking at facing another economical crisis at the moment. Yeah. Do you feel going into this that the experience that you had then has left you in a stronger position then?
It definitely has changed the way that I am as an investor. So I'm very, very cautious. If I'm doing a deal analysis, I look at worst case scenario all the time. And if I'm happy with worst case scenario, I'll go into the deal. If I can't handle worst case scenario, I don't go into the deal. I'm excited about this economic crisis we're about to go in, because I know that 99% of the population are not going to be in the market, which is going to leave masses of opportunities for us. And I'll be able to do deals this recession that I wouldn't have been able to do last recession. So
I'm an investor.
Yeah. So I wouldn't have been able to do, say, a commercial unit to residential conversion 10 years ago, whereas now I've got more experience and knowledge under my belt. I'm looking forward to doing more stuff like that. Yeah,
sound exciting.
Yeah.
So step back a little bit then. After you started finding, was sort of the first investor you found, is the question I was going to ask, was that someone that was in your own network that you had already built up a relationship prior to and just needed that proven track record with them, or was it someone completely new you didn't know?
Somebody I met at a black tie event, so there was alcohol involved. And I never know if that actually helped or not. But interestingly, he had attended a similar course, so he understood the deal analysis. He understood how I'd been trained. So we didn't really need to do sort of private investor proposal document, the full bells and whistles. He kind of got it. He was very time poor. I was time rich because I didn't have a job or a business. So we just thought, well, let's work together. And so he provided the deal, the money on that first deal.
So the first deals that you went into with private investment funding, did he come as a joint venture partner to put the funds in, or did he just lend you the money based on a return on investment?
Yeah. So this is one thing that over the years I'm really quite strict on, and I use private investors as an angel investors, and they are providing the money, and they are not doing JVs with us. Don't ask me why I've got that opinion. I've just heard too many horror stories of JVs going wrong, particularly, if people have complicated home lives, situations can change, and when money's involved, people's priorities can get a bit messy. So I've always avoided JVs where, you know, you're in a deal with someone else. It's just, I'm the property person, they're the money person, and that's how the relationship is.
Yeah, no, that's a really interesting point, actually. Yeah.
I've seen too many people, let's say, if you co-own a property, or you co-own a business with property involved, what if one of those people involved goes through a divorce? What if there's a death, or, you know, it just gets so messy. So I'm just, you know, I'm very, very simple, very safe. I'll be the property person, you be the money person. You're getting a better return on your money than you would get anywhere else. It's secured against an asset, and that's how it's gonna play out.
So can we go into some of that details as well? Because I know people in the podcast group were asking about this recently, about raising private finance. So we'll just do a little couple of questions on it. When you were raising the private finance, or even back then when you kind of first started out, did you borrow enough money to purchase the property fully from the private investor and give them a security on the property?
So depends what the angel investor wants. 100%. It's got to be what is in it for them. So one of the tips and tricks that I use is I never ever ask someone for money, and I think that's something that people find hard to get their heads around, is how the hell do you find angel investors without asking them for money? Well, you just start talking about what you're doing, and the minute that you say that you do property investing, even if you've not even bought your first deal, everyone's got an opinion on it because they watch Homes Under the Hammer, right? The conversation will come around to money, like, oh, I've always wanted to get into property, but I've not had the money, or I've always liked that program, but it takes a lot of money. And the money topic comes up when you talk about property, and it's in that little window of opportunity there that you say, oh, I use investors' money, and then they become curious and ask more about it.
The whole attraction marketing, then. Yeah,
and it's, you're not asking it. The minute that you feel like you're having to ask someone, it can make, you're giving them all the power to say no. Don't give them the power. Keep the power to yourself, because you're actually offering them something fantastic. So, you know, when you meet someone for the first time and they say, who are you and what do you do? Which I always refer to as the human being's bum sniff. You know, when dogs meet, they sniff each other's bums just to find out if this is a dog I want to say hello to. Well, human beings do it in their own way by saying, where do you live and what do you do? So when someone says, what do you do? I say, well, you could say, I buy houses and I beat the banks. And then no one's ever going to be interested in the house part. They're going to be like, what do you mean about beating the banks? And then straight away you're opening up a can of worms that they'll talk to you about money.
That's interesting. Very good concept on that.
Yeah. It's all about mindset, isn't it? It's how you think.
While you were actually explaining that, I'm actually thinking back to the private investors I've used, and you're 100% right. It's a light bulb moment for me, you saying that, because I've never actually asked for the money, I don't think. It's came to me because the deals are so good, I believe in them, I'm talking about them, and someone wants involved.
I'll give you another little tip that I like to use, particularly when I'm speaking to people who are really, you know, really raw, and they're really at the beginning of their journey and they're nervous about this topic. And I say, well, use the tool of the private investor proposal document, right? Put it all together, put the deal in there, put what the investor's going to get out of it. And then all you need to do is contact all your friends and family and say, will you do me a favor, before I give this to my investors, will you read over it and give me some feedback? Now, you're not asking them for money, but you're putting your private investor proposal document right under their nose, and they could be reading that going, hang on a minute, this looks quite good. And you just never know what is going to come out of that.
I'm sure listeners are going to find phenomenal value through that tip.
Yeah, there we go.
I was going to say, what if the dog starts sniffing the dogs on heat? What happens then?
Yeah. Oh, yeah.
We'll cut that bit out.
No, we won't.
I've pretty much got this mic on mute because I've got 3 kids in the background here absolutely screaming and shouting. So I'm letting Stephen do all the work here. So I'll just let you guys carry on, okay?
I mean, this is feeling very uncomfortable for me. This is usually your role. I'm usually the co-host. So Caroline, can we take a little step forward and into your property journey? So once you were, I'm assuming it was just single lets you were adding to your portfolio with investors' money. What was the stage where you reached a point where you thought, right, I've got enough. This is enough. This is cash for me. The business is where I want it to be. Yeah. We've reached our targets. What was the the next phase of strategies to go into bigger and better deals, if you like?
So I've talked about being very safe, you know, like Julia Roberts in Pretty Woman is a safety girl. That's who I model myself on, apart from how she earns her money. So I'm a safety girl in property, and I look at diversification always. So I first started buying in Cumbernauld, for example, and I was buying houses there as if they were pairs of shoes, just like, you know, one a month. Boop, 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 boop. And then I thought, right, well, if the arse fell out of Cumbernauld, my whole business is over. So I need to diversify the strategy and the location. So it's always based on a little bit of strategy, location, diversification to keep the business secure and safe, regardless of what happens to the market, and boredom, in all honesty. You know, you get bored doing the same strategy over and over and over again, and you feel you need to be stretched and challenged a little bit. And that's when I thought, right, well, you know, little baby buy-to-lets are not doing it for me anymore. I don't get excited by it. How about I go and do a property that's the equivalent of 5 buy-to-lets in one? And it's a sort of a combination of diversifying the location and strategy, and a little bit of wanting to push myself a little bit further.
So just like, obviously you've changed a little bit from the buying a single buy-to-lets, or do you still do that? Give us a little idea of what your portfolio looks like now. Like, how many buy-to-let units have you got? I know it's not all about the number of properties you've got, but it just gives us an idea of, you know, where you're at now.
I think once I peaked beyond sort of 25 or 30 buy-to-lets, it was, and in all honesty, I had to get out of Scotland. And I don't mean that to be anti-Scottish, because I've lived in, you know, breathe Scotland. But
it's all right. We've got loads of listeners in England. In fact, most of our listeners are actually in London, believe it or not. So.
Welcome. My husband's from London. You know, I don't know what the SNP are going to do. And if Scotland did go independent, again, for lending purposes, that would screw my business. So again, just diversify. So core central belt of Scotland, buy-to-let, social housing. And then down south, it's my multi-lets, my HMOs, my development stuff. I find that developing south of the border is a hell of a lot easier than north of the border. HMOs are far. I've got a couple of HMOs in Scotland, but they were kind of accidental. And south of the border again on HMOs is a lot easier. And the hotel, you know, we're likely to buy the one across the road from that, so we're in negotiations with that at the moment, and we're moving into industrial. We're negotiating on a warehouse right now, so we're going to be splitting up a warehouse and building another one next to it. So it's like it's changed quite a lot since I started, and again, it's just to diversify and make sure that any market condition, the business is still generating. Yeah, because
whereabouts is the location of the hotel?
So that's down in Southport near Liverpool. It's got 4 sort of business angles to it, or cash flow angles to it. It's got the leisure industry, so people love going there for their holidays. It's got a convention centre, so, you know, Strictly Tour and you know, various other comedians and stuff go there. You've got business, and you've got golf. So you've got 4 potential markets there.
When's that due to fit? Is that still ongoing, that project, or is that?
Yeah, so the furniture's arriving on Monday, which means we can then dress it and then start marketing it. Depending on what the government says, I would imagine we can start taking bookings July-ish.
You know, timing for you getting that project over the line during the lockdown and stuff as well, ready for when you open.
So the plan was, we actually secured that deal March of last year, and we exchanged with a delayed completion. We exchanged at 5%, and we wanted to complete in the October because the current owner, she was an owner-occupier. She had a 3-bed flat at the side of the hotel, or guest house, I guess. And we wanted her to honour the bookings. She wanted to honour the bookings through the high season of last year, which fitted us perfectly. And then we were going to go in October and renovate throughout the winter, the low season, then open high season March. And then this virus thing came along. So, you know.
Span on the works a wee bit, but you'll get, it sounds like you're pretty positive about it anyway.
Oh, yeah. It's always, I'm a massive believer that to every problem there's a solution, right? And again, I didn't have a diverse portfolio, then it would have been more painful, I'd imagine, particularly if you only did service accommodation. Shit, you'd be in some serious bother right now.
So can you talk us through some of the kind of due diligence process and the appraisal of this? Because if this is your first one, it's a bit of a risk on the unknown of what your occupancy rate is going to be, and obviously you've got quite a unique model to it that it's going to be a staffless hotel based. So would you be able to take us maybe some of the background, the basics, and maybe some of the numbers?
Yeah. So we are all about finding a model and creating it and then repeating it. So that's what we did with the HMOs. We took 3-bedroom terraced houses, we ripped out the insides and we turned them into 6 or 7 bed HMOs. And we started that in Birmingham near the university, and there was already precedent set with a back end value, so we knew what would be valued at the back end on those HMOs. And then we hit a snag where we just couldn't get enough stock, so we had to move that strategy to Liverpool. But that wasn't a tried and tested market, so our back end value hadn't been established. So that was a bit of a challenge for us. But I think when you're a wee bit more experienced, you can kind of take a little bit of leaving some money in a deal because the portfolio could support that. So that's how we started to think about this model and creating a model that hasn't been done before and managing to do it safely. So the smart hotel concept was because my husband Nick, he mentors people on a sort of one-to-one basis up and down the country in their investment area, and he's stayed in so many shitty guest house, and every time he's at the breakfast, the guest house owner says to him, "What do you do?" And he says, "Property," and they all said to him, "Would you like to buy this place?" And he starts to think, right, there's so many guest house owners that want to sell, there's maybe something here, because what you're getting is not just all the bedrooms, you're also getting their accommodation, and if they move out, that's more profit centres within the building. So that's where the concept came from, is just him being constantly asked if he'd buy a guest house. And then we found this location that had the 4 potential revenue streams, which hit all our criteria. And this lady was happy to sell. It was a 3-bed flat with a 9-bed guest house, which we're turning into 11 beds. So we're taking, of course, what was the breakfast room and turning that into a bedroom. There was a bar, that's another bedroom. So we've had a couple of bedrooms there. We are going to have a sort of kitchen area, food prep area, but there's not going to be cooking facilities, and there is going to be a lounge, so that if 11 or 15 golfers want to come and take the whole house, that's an opportunity as well. So there's various different exits on the potential rent with it. But yes, how on earth are you going to value something that's not been done before in a location? And that's where we really had to sort of dig deep and look at comparables in other locations. So we saw somebody else did a similar model in Cardiff. And we're like, well, Cardiff's a completely different city to this. So I found a surveyor who I used to go to uni with, who specialised in hospitality. And this was actually, we'd already gone into the deal, and we thought, well, if we get 6 times the EBITDA, you know what I mean, the kind of commercial valuation that you get on these buildings. If we value things on 6 to 10 times that figure, that's super, super cautious. And we know it's going to cash flow really well. We based our occupancy rates at around 25%. So again, you can see that's ridiculously low. I mean, I would tell people if they're doing service accommodation to base your occupancy rates at about 50% with about 40% costs. Well, we did 25% occupancy with 50% costs, and it still worked. And we did have that moment where, like, what the hell are we missing here? We must be missing something, because this looks too good.
So second unknown, you always doubt yourself.
So we went into the deal. Then I'd found this bloody surveyor guy on LinkedIn, and he was like, no, I'd value that as a guest house, and you get 15 times the revenue. And I'm like, holy shit, this is going to be valued way higher than we need. This is brilliant. So that should probably cash flow for us anywhere between £4,000 and £6,000 a month. But yeah,
at 25%.
And that's at 25%. Well, at 25% occupancy, it'll probably cash flow around 3.5. at 35% occupancy, about closer to the 5 mark, and then at 45% occupancy, it's about 6 and a bit.
Really good. So are you going to be able to refinance that once it's completed, or do you need a 2-year kind of trading period to prove that it's operational and it's working?
Yeah. So some banks are saying that they'll look at us at 12-month periods, and some are saying 2 years. So our angel investors are in for the 2 years. They're quite happy with that. Because again, we kind of want to paint the worst case scenario to them just to buy ourselves some time on revaluing. But with COVID happening, I don't know. I don't know what's going to happen, and we might have to wait 2.5 years because we've missed our first high season of revenue.
Could you run through rough numbers? You know, what the purchase price was, what the development cost? Because it's quite a big renovation. It's a high spec one as well. Obviously, I'm assuming part of the renovation cost was putting in the infrastructure for keyless entry or whatever your kind of security system is going to be as well.
Yeah. So the actual fabric of the building was sound. I mean, we didn't really need to do huge amounts of structural stuff apart from a couple of walls down or a couple of stud walls up. So yeah, from a 9-bed guest house with a 3-bed flat, we bought that for 340. I just did the numbers on the slides the other day, stamp and fees and everything else. That was about 9,000, and then we've spent about 160. We've got one person that is going to basically do all the changeovers and the cleaning on an hourly basis, and she's the wife of our builder.
Right, handy.
That's quite handy. And he did all our build work on our Liverpool HMOs, so he's tried and tested, and we know that he's really good. So on the back end value, we're in the deal for about 520, something like that. And then we reckon that with our conservative annual income will probably be around 93 at the occupancy of around the 25-30% mark. Wow. So at 10 to 15 times that, so we value potentially over £1 million, we'll only need a 50 to 60% loan to value on it, which would be good. Now, bear in mind, it is Southport, so I think a surveyor is probably going to look at it and go, although the multiplier puts the value at over £1 million, is there anything else in this area over £1 million? And there isn't. So again, we're being conservative and saying, well, the numbers say it should be at that value. In reality, a surveyor is probably going to struggle to put that value, but we only need a valuation of over 700 and we'll be happy with that. So we've got enough margin there.
And have you got an angel investor to fund the full development purchase price and the renovation, or did you do a delayed completion to pay the owner once?
So we did the 5% on exchange last March, and we funded that out of our own funds. Then we got development financed through Together, which is like a commercial, it's like a hybrid product that Together Finance have, which is not quite bridging and not quite commercial, but kind of in the middle. And they funded the majority of the purchase. And we had an angel investor do the remainder of the deposit, and then I had other angel investors doing all the refurb. So I guess we've only put 5% of 340 grand into it.
I was going to say, not only is it a smart hotel, it's a smart property strategy as well. Listening to those numbers, is it more a kind of, like you say, is it more a service to accommodation style model than a kind of hotel? You're not going to have like the front desk and somebody staffing it and all that. It's all like remote.
Yeah. So as far as a surveyor and a valuer is concerned, it's a guest house.
Right.
So that's what it would fall under the surveying terms. But to call it serviced accommodation when it's like a 3-bed flat and 11 bedrooms, it's probably a bit too big for that. So I guess for people to understand, we're just calling it a smart hotel, but that's just that's what we're calling it.
That's cool. I think that's really smart. And in terms of the operational side of it, are you going to have to obviously put quite a bit in to get this up and running, quite hands-on at the start, and then obviously set up the systems and let it kind of run itself afterwards, hopefully?
Well, I think this is the learning, right? Because this isn't really a property strategy. This is like a hospitality strategy with a bit of property thrown in, isn't it? So we want to be very hands-off. Nick and I are incredibly lazy. So we leverage off other people's experience. So we've got a virtual assistant who's learned all the central management booking system. So we've got that sort of outsourced. The person on site who's going to do all the changeovers. And when someone books on any of the OTAs, then they get a code to get access to the main building. And then we have a kiosk. And this has actually worked out quite well with COVID, to be honest. We were going to spend about $7,000 on a kiosk that they could punch in a different code number, and then it would spit out a key card to their room. Because our research told us that people still love having a key card room. We wanted to use their mobile phones as entrance to their room. Human beings aren't quite ready for that yet. And I think in probably 5 years' time, that will be the norm, but they're not ready for that change. That's too radical. So we were like, well, okay, we'll pay the money to get the key cards put in there. But because of COVID, we're like, do you know what? We can market this as COVID friendly, or I don't know, not COVID friendly. That makes it sound like we're welcoming COVID, or COVID proof, because you're not needing to touch anything when you go in. You're just touching your phone. And so I think we're just gonna kick the idea of having the key cards for the room entrance now. Because
that's cool. Sounds like a really exciting project, and obviously wish you all the best with that.
So thanks very much, Caroline, for sharing the details on that. That looks like a phenomenal project. Could you answer a couple other questions that I think listeners would take quite a lot of value from? Like, what's your biggest lessons and your biggest mistakes you've made to get you to where you are today?
So what I've been noticing on social media is a hell of a lot of property gurus popping up, and they look about 12. Maybe that's just me being really old, I don't know. And I think it's really important that if you are going to go into a JV or be educated by someone or take advice from anybody, that you're taking advice from someone who's actually done it themselves. That's the first and foremost thing. I mean, there's lots of noise out there like, oh, property crash, this is the worst time to get into property. I'm like, ignore all noise. I think that's my first piece of advice, is just do not listen to the noise. Listen to the people who are out there doing rather than talking. And then if someone approaches you to go into a JV, be very clear on what the motivations are for that. If they're saying, well, you've got the money and I've got the deal, then I'd be saying to you as a person, well, what's stopping you going out and finding your own deals? And I always push people whenever they're saying, well, it's easier for me to do a JV than do it all myself. And I'm like, you're being lazy there. Because if you use JVs as a crutch, then you're never going to learn how to do it for yourself, right? And I just, over the last 12 years of doing this professionally, I've seen people's behavior when money's involved and priorities change, because you just never know when shit's going to happen. And when something happens in someone's lives, their priorities change, and then their attitude to the deal might change, their attitude to the money might change, and it just gets ugly.
Yeah, I think that you see this quite a lot where people attend like training courses and things like that for the weekend, and they've only spent like 2 days together, and then they'll jump into bed, together, on deals and stuff like that, and you think, oh my God, that's a recipe for disaster, isn't it?
Yeah, it's crazy. So I'll come clean and say I went into one JV and it cost me 40 grand, and I've never been in a JV since. Whoa. And I'll explain how it kind of happened, I guess. God, I can't believe I'm sharing this, because it's something that
this is good.
you do get embarrassed about, because you think, fuck, why was I such an arsehole to fall for that? So somebody who was I looked up to, that I thought was very, very experienced in property, that was doing phenomenal deals, or so they said. And this was around about the time when we were thinking about getting into HMOs. We're ready to step up, we're itching to get into the bigger stuff. And he was like, yeah. Well, I've got money and stuff. I've got all that. You do all the legwork, and I've got the experience in HMOs, and I'll just fund the money. So I was like, oh my God, this like big guy who's amazing in property is wanting to get into the business with us. This is fantastic. So I was flattered. We went out there and we actually started buying a whole bunch of pubs. We started buying pubs that we were going to then convert and develop. We bought about 4 or 5, and a limited company was set up, and bridging was used, and he was like finding angel money and stuff like this. And what actually transpired was this guy had 0 credit file. His credit was knackered, and he actually tried to hide the fact that his credit file was knackered and put some bad toxic debt into his wife's name. So tried to sort of pull the wool over the bank's eyes by shifting it. And of course, whenever we came to refinance any of these pubs, we were just getting blackballed left, right, and centre. And it came out in the wash that this guy had really bad credit. We were never going to get any lending. We had bridging, we had angel money, we had all sorts going on.
And did you put some of your own cash in as well at this point?
We had to put some money in as well. Yeah, we put some time and energy. Over the piece, there was probably about 5 or 6 of us involved, because that was the other thing I thought was really strange. Anytime anyone was getting involved in business, he just cut them in on the company without asking us, and we were like, that's weird. Is that how you do it? So, you know,
I think that was a ploy to get him to use other directors as a company to
exactly.
basically get credit. Yeah.
And you know, we were just really naive and thought, you know, is that because we've never done this before? Is that how it's done? And we never questioned. We were too embarrassed to question. And then when the shit hit the fan, guess what? He got really ill, and we've never seen him since.
Right.
He had to sort it out.
So how did it end? How did it end? Did the company get dissolved? Did the assets get sold off?
So yeah, we focused all our attention on selling off the assets as quickly as possible to clear the bridge and the angels, and any shortfall we were going to plug ourselves. So there was Nick and I, and then there was one other party that were left saying, we are not going to allow our reputation to be damaged because of this guy. So we made a pact between the 3 of us that any shortfall we'd plug. So there was an 80k shortfall, and it was 40k each.
Right, that is amazing. Like, everybody who's listening to this, stop right now, right? And just think about this, because it's so easy to get caught up in hype with people, and there must be loads of other people like this guy out there that are doing similar things, especially to kind of newbies and property, you know, new investors. So is that, looking back on it, and hindsight's a wonderful thing, you're sitting here now, is there 1 or 2 things that you could say to people, do this before you get into business with somebody? I mean, could you have gone and carried out a credit search or something like that on the guy?
That would be my first thing. If, you know, well, number 1, why the F are they wanting to get into business with you? What are you bringing to the table that they can't, right? And if they're more experienced than you, then like, you've got to be suspicious. This is why I've never done a JV since, and I never ever will. Yes, credit check. If they won't show you their credit file, then run for the hills. I mean, I guess they could doctor it if they're real, like, proper con men, then they could potentially doctor it. But I would definitely want to see a copy of their credit files. But
there are website services out there as well which can run like checks on company directors as well. So if they've got already, if they're a director of a company as well, I think you can, you know, I don't think it's even that much to pay for the report as well. I think it's worth it. Well,
to credit search someone, you need to get their authority, right? You need to have a signed mandate to credit search someone. You can obviously credit search a company without any consent. But yeah, the credit search part is really important. Maybe a profit and loss. You need to be really, really transparent. Like, what's their financial situation? You know, what's their portfolio looking like? You know, what's their motivation? And to be honest, this is why it's really simple for me. You just didn't go business with anyone.
It's so difficult at the start though, isn't it? Because like you said, you got sucked in. Oh my God, this guy wants to like give us his money and do deals with us. And you're thinking, I don't want to rock the boat here, start asking all these questions, asking for like a credit report and all that, just in case he turns around and tells you F off. Do you know what I mean? So you can understand.
So the way around it is, all right, if you're going to provide the money, brilliant, we'll put the properties in our company's name.
Yeah.
And if they're not happy with that, then well, why? The only time that I would set up a limited company with someone else involved in it, with property being the asset held, is if I was going to flip it, do a development and flip it.
Yeah.
Any refinance, any long-term relationship, do not do it. Just don't do it. this whole, oh, we're going to go in together, we're going to split the cash flow. Oh my life, that is a disaster, because at what point do you exit?
So you would say a preference, obviously, to people, if you can try and get just straightforward, like loans, just angel investor loans, basically.
Yeah. I don't even offer it. Like, going into this with me is not even an option, pal. If you want to learn how to do this, I'll teach you for a fee, but I'm not going to go into business with you. Yeah. It's not, nobody wins in that. You're actually going to potentially hold each other back. So yeah, I know it's the opposite to what a lot of people say out there, right? A lot of people are like,
you've got the negative experience straight away to back that up and have a justification on why you don't want to do it.
Yeah, and whenever I meet people and they're like, oh, I'm going to go into business with my best mate, I'm like, well, that's a friendship that's buggered. I know that's going to happen.
Someone asked me that recently as well about, I want to go into business with my cousin or brother, and I was like, no, don't. If you value that relationship, don't.
Exactly. It's like, when Nick and I went on that first property education course, we had 3 buy-to-lets in joint names. And we learned on that course, you never buy investment properties in joint names. We're like, oh shit, we didn't know that. So you just don't know what you don't know.
True, that is true.
We've never bought properties in the same name since. Well, apart from, I guess, our home, but even with that, we're tenants in common, which means that in the event of my death, my half goes elsewhere, not to Nick. So it's all about estate planning and asset protection. And if I decide I don't like Nick anymore, it's very easy to split the assets.
Let's just touch on the education and the courses for a second, because I always like this subject because it's quite controversial, and obviously it gets a lot of people interested. So I think, like, looking back on your social media and all that, it looks like, do you have some sort of connection or something to one of the training courses, or have you been on one or something like that?
Yeah, so we attended a 3-day course November 2008. We attended a 3-day course November 2008, and then we went on and spent £22,000 on our education. Now I know everyone is just going to be like, sharp intake of breath.
Was that looking back, was that the right decision at the time, or would you do the same again?
Absolutely the best decision we made, and I would pay 4 times that now.
What do you think it is? Because I've been thinking about this recently, because you can get the information for free a lot of the time. And me and Nick have spoken about this quite a lot as well. And I've paid for education and it was probably the same length of time being involved in property as you, Caroline. Had a decent portfolio, been involved in property 10 years, and then went on a course and then paid for it. And people are like, why would you do that? But it opens your mind up. And I don't know. And this is the question I'm probably going to ask: is it the fact that you've spent that money, you need a return? You've put I'm not spending this money for nothing. I need to make this work. Whereas someone that maybe goes online and learns everything, gets all the free information, goes on free events, podcasts, books, everything. They've not put any skin in the game, so they don't need to action anything.
Correct. I think it's a combination of the two. Like, I know that well, first of all, you would only really attend that course if you're in the right mindset, in the right sort of place to need it, right? So I think, if I'd been in my well-paid corporate job, I never would have attended that course in a million years. I certainly wouldn't have paid the money because I was too comfortable, right? I was in a place where I was like, shit, I need to accelerate this quickly. I need help because I've clearly not been doing it very well. And the £22,000, listen, that was not an easy spend. Like, there was tears involved with that decision.
Is that £22,000 for you and Nick, or just you?
No, for the two of us.
Right.
For the two of us, we got 4 specialist courses and a one-to-one mentorship in the field. And to be honest, specialist courses, I'm not a fan, right? But the one-to-one in the field, fucking hell, we spent 3 days with this guy and we bought 4 properties. And then we just had the blueprint. So I've only been mentored once on buy-to-lets in Glasgow, Cumbernauld. And here I'm doing, smart hotels in Liverpool. I don't need to be mentored again. I'm using the same blueprint that I just repeat, adjust when I, expand my knowledge through osmosis, being around the people that are stretching me and better
deals, yeah.
It's really important to just be in a network of people that are better than you. So keeping ego in check is really important in this game. And in property, there's so many bloody egos.
Here's a question for you, Caroline, right? So I look around at these gurus, like you say, like some of these gurus, but I know some of them are legit as well. But, you know, there is a lot of gurus out there, and you look at their social media pictures and they take the picture of the room with hundreds of people in there.
Yeah.
And obviously I'm just judging on a picture, but a lot of the people look quite young, right? Yeah. So what you said earlier on was, you know, what situation are you in to be actually going to these events? It seems like, number one, there's a lot of young people wanting to learn how to get rich quick. You know, number two, I see quite a lot of vulnerable people going to these events. Do you know what I mean? And my question to you is, should there be more of a duty of care to the course providers to do a bit more background checks, how they're actually financing the course? And if they do agree to do the $2,000 course, and then, you know, they're upsold onto the $20,000 course, should they make sure that the people who are doing the $20,000 course are the right fit and the right mindset? Or is that not their job to do that? What's your view on that?
No, I think absolutely. I think the whole industry needs to probably get regulated. Listen, for an education company to take £20,000 off someone that can't afford that £20,000, all they're doing is setting themselves up for a fall, because now they've got one customer that's going to bitch and hell and moan and complain about that company. So nobody wins there. You want people who, you know, can pay that money, do something with it, and then come back and be a raving fan, and then be a future mentor, future trainer, and all that stuff, right? So yeah, I think, you know, there are people out there that are doing it in a way that's probably not
a bit unethical.
Yeah, not the most ethical. But listen, on the other foot, right, you can't stop people wanting to come to seminars. There's seminar junkies that are just lonely and love to chat and network at these things.
Yeah, and a lot of people will argue that's their choice. I mean, who are, you know, like, it's just like everyday life. It's up to you what you want to do with your money.
Yeah, freedom of choice.
I've met people that have spent £26,000 and they do nothing with it. They don't even go on the mentorship. You know what I'm saying?
Yeah, there seems to be a lot of that.
And I think, you know, ultimately, I always talk about why are you doing this? Why do you want to get rich? Why do you want to be wealthy? And when I say rich, rich doesn't need to be necessarily monetary terms. It could be rich in your health or your lifestyle or whatever it is. But why? Why do you want to do it? For me, it was get the hell out of the shithole that, you know, position was in. That was my driver. My driver now is I want to be disgustingly wealthy, so that my kids can do whatever the hell they want, and even if that's, you know, it doesn't matter, they don't need to worry. But I'm all about protection, so that if they marry, I've got 2 boys, so if they marry gold diggers, those gold diggers are not going to get my boys' money. Right? So that's where my driver is right now.
That's good. Well, we're talking about now, Stephen, do you want to, like, we'll pause just now and then we'll wrap up, because I'm conscious of time. Stephen, do you want to just take it on to Caroline, and you can give yourself a plug here, Caroline, and, you know, what it is you're doing now. You know, give us a bit about, you know, what you're doing so that people can reach out to you. On you go, Stephen.
Caroline, it's been a phenomenal interview. I think the listeners are going to take huge value from it. I know myself and Nick have totally enjoyed it. I think we could actually speak for hours, I'm pretty sure, but we're quite kind of cautious of time. Could you give listeners, you know, where they can reach you? I know you did say you're starting to build your social media a lot more, so I've got you on Instagram as well. Can you give the listeners, you know, where they can reach out to you, contact you, follow your journey, and see what you're up to?
Sure. So I'm on Instagram under Caroline_Claydon_property. I'm on Facebook. I've got a Facebook page, Caroline Claydon. I'm on LinkedIn as Caroline Claydon. But I've started a community for entrepreneurial women called Invest Her with Caroline Claydon. It's a closed group for women to talk about all things business, property, starting a side hustle, whatever it might be. And I'm just there to support and help anyone that's either starting or looking to scale their business. So that's on Facebook as well. And we're always having, like, every fortnight, have a Zoom about a certain topic. And on Tuesday, the 9th of June, I've got my tax and business advisor on to answer any questions about business and property.
Super. That sounds great, actually. It's quite interesting because, you know, I'm quite an advocate of women and power and being entrepreneurial. And obviously I've got a young daughter, so I'm really want to encourage it. But when I was looking at statistics of our Facebook group last night, it actually broke it down into, you know, women, male, age, demographics, location, stuff like that. And there's actually a lot of women on our podcast group as well, and it's encouraging to see. And obviously we've interviewed Linda Martin and Gillian Dean already on the podcast, so it's nice to see these women taking the bull by the horns and going through the businesses. Superb.
I taught Gillian Green about 3.5 years ago.
Well, we don't want any gold diggers, that's for sure.
Gold diggers do not come to my boys.
Maybe that's why they're on the group.
That's good. Well, Caroline, I think that was absolutely gold. Thanks very much for sharing all. And you really went into a lot of kind of personal stuff as well, so we appreciate that. And I felt like you really gave an authentic account of your property investing journey so far. So thanks very much, and hope to speak to you again soon.
Thanks very much, Caroline.
Hey, lovely to meet you.
Cheers.